365, welcome, shake my hand, welcome every single person. Thank you for joining another war room. This is war room number 72. We're getting very close to 100 war rooms. If you don't know, this is where I normally map out my trade ideas, specifically swing trade ideas, where we look at the big trends, how money is moving, and how we can attach ourselves to the flow of money and where we can buy or sell. We've been very, very, very hands-on for the last weeks to months around recession, inflation, you know, the overall long-term trend, because we focus on institutional levels, right? And that's so important and fundamentally makes us, you know, very different from most trading channels, trading groups, etc., etc. But in today's war room, I want to give you guys a quick dose of some market sentiment, right? So we're just going to build from where I left you guys on Wednesday. On Wednesday, we're at the FOMC meeting. We got a 75 basis point interest rate hike. I explained what that meant. We listened to Powell. I broke down Powell. So I've been doing a little bit of research since then. I've looked at the, you know, some of economic projections. I've looked at a lot of their researchers. I'm talking about the Fed researchers and what they're really saying, what Powell is kind of not saying. And I want to talk to you guys about that for about 10 minutes. Then we're going to look at Nasdaq, S&P 500, US 30, Bitcoin, Ethereum, the dollar, Pound USD, USD Swiss franc, USDCAD, USDJPY. And you'll notice I'm centralizing a lot of dollar pairs for this week, because there's something weird about the DXY chart that we need to kind of like unpack, right? And then if I'm right about that, it's going to have a multiple, a domino effect across a lot of currencies. And then straight after that, we're going to look at Pound CAD, Pound NZD, CADJPY, Pound JPY, Russell 2000, the Japanese index J225 or Nikkei 225, some silver, right? The XAGUSD. And then if there's time, we're going to end off with Euro Pound. So that's what you're going to sit throughout until the end of the video, or during the live stream, or even after you want to, after come back to these trade ideas, compare what I'm saying, what's going on during the week, and I hope your trading is blessed, right? And then please don't forget to check out the links in the description box, right? Our institutional traders course link is in there. Wealthy in 3 years pro. If you don't know what's going on in the crypto market and you need to get guidance on the right token to invest in. If you know about us, you know our track record, then that link is also down there, right? But apart from that, guys, I'm very excited to get started. I am extremely excited to get started, and I think we should start right now, right? Oh, by the way, please don't forget to like and subscribe to the channel. I show up for you guys definitely a minimum of once a week, but then, like I said, there'll be lots of changes onto the channel this week. A lot of these are my swing trade ideas, but they're also like, you know, NFPI cover, FOMC cover. I'll be introducing a midweek, probably on Tuesday, not even midweek, Tuesdays, intraday, you know, day trading setups for a new type of war rooms, short-term war rooms around my scenario analysis that's coming up on the channel. Our podcast is coming back on the channel. If you remember the podcast, you know, that stuff is coming back because I'm finally done with the stuff that was taking up a lot of time. But yeah, all our playlists are there, so please don't forget to check that out on the channel, right? So I want to talk to you guys about a couple of interesting things today. You know, as we map out our sentiment, I will be very, you know, mindful of time. So I might not go through all the checks and balances like I normally do, but I trust that you will kind of like do that yourselves, you know, during the course of the week. But maybe let's just quickly see how markets ended, and then we're going to go through those things. But I read a very interesting, you know, piece of research on Friday. It came out on the 17th of July. Yeah. Look for more selling pressure next week as investors learn the hard way not to fight the Fed, right? That's the the opening headline there, and it's got a lot to do what I want to talk about, right? I haven't read this particular article here, but I'll show you what I'm looking at, right? Bitcoin during the weekend touched 1800. I'm aware right now we're a little bit up. We're a little bit up, or I feel like we're going back to retest 20K. It feels like it. I could be wrong. We'll see. We shall see. We shall see. We shall see. Right, and then we had a little bit of a dip in oil this week. I don't know if you guys noticed that, right? Oil slump, 6% snap, 7-week winning streak, right? So oil is moved away from the 120 levels, currently at 110. Brent oil at 113. Natural gas is still quite, reasonably high, but there was a little bit of a pushback, right? And then we got Euro markets, right? The FTSE 100, I spoke about this in the public Telegram group. You know, there's a lot of pressure. There's a lot of pressure with UK right now. A lot of pressure, right? European markets closed slightly higher to end, you know, a tumultuous week. And I think Ray Dalio's got a $5 billion US bet on the Eurozone in general. So he's selling quite a lot of, you know, which is kind of like telling, you know, there's the Asian markets, not too bad. Pre-markets, you know, Nasdaq just at that 11,300 level, give or take, S&P 500. We're going to look at all these charts individually, right? I'm just giving you kind of like a quick overview. But what I really want to talk to you guys about is this little, you know, piece of information here in front of you, right? So this is called the Liberty Street Economics. And I just want to be very clear. In fact, let me open my PDF version of this so that we can then, you know, mark it up together. Right, so in front of you, so it's like, oh, so sorry. So first of all, I want you to see exactly where I got it from, right? So this is from, you know, the Federal Reserve Bank of New York, right? Federal Reserve Bank of New York, and I'm looking at the Liberty Street Economics, and this dropped on the 17th of June, kind of like waiting for this. So now this thing that we're going to look at for like 5 to 10 minutes, guys, is put together by researchers who feed in the information that helps Jerome Powell and the FOMC make decisions, right? You know, like so how this works. And I'm sure I've told the story before. In my time as first a financial analyst before I became a floor trader at Allen Gray, my job was to put together all this data, right? Make sure that the people above me understood what I thought the markets were trying to tell me. They would obviously fact check me, but my job was to make sure that their job was done properly and as quickly as possible. And so this is what this document is, the one that we're about to kind of like read right now, right? This Liberty Street Economics, right? So these guys feed the FOMC with information about the markets. They get CPI, they look at all sorts of data. But what the FOMC does and what Powell does goes back to that thing that I say to you guys on Sunday. If you remember on Sunday, guys, I told you that the government's job is to ensure that there's never panic in any situation. It could be COVID, it could be you know, economic meltdown, right? There should never be any type of panic in the economy, and so they word things carefully. They talk about real unemployment, and you'll get different numbers, right? So this is kind of like an inside look to the people dealing with the raw data, and this is what they have to say, right? This is going to take about 2 minutes. I've already read it. I'm going to skim through it, a couple of important things for you, so you decide for yourself for your trading, right? So number one, we wish to remind our readers that and this is kind of like what they work on, the dynamic stochastic general equilibrium, the DSG model, right? It's a very fancy model. And what this model does is it basically assesses economic growth, gross domestic product, the GDP of a country, economic output, unemployment, measuring inflation. There's a sixth pillar, I forgot it, but basically it's like a health check of the economy, right? So they say, look, man, just so you know that while we are using the DSG model forecast, it is not an official New York Fed forecast, but only an input to the research staff of overall forecasting purposes. Why are they saying this? Because what Powell says in the meetings, it can sometimes be very different from the raw research that you receive. Number one. Number two, when things hit the fan, which they will, things are technically, you know, hitting the fan right now. And you know, by things, you know what I mean. You know, there's a lot of feces hitting the fan right now. Now, when things hit the fan, Powell one day is going to be like, look, you know, I do recall our researchers saying this is a probability. That's what he's going to say. Somewhere down the line, when he now needs to provoke the market, when he now needs to like really shock the economy, he's going to say, our researchers did put out that there was this possibility. In my opinion, as head trader of Business 5 Trading Academy, this is the first time in a very slight, very disguised way, the government is not lying about how bad things are, right? So this is not a probability. This is one of the bigger truths out there, right? So these guys are covering themselves. They're saying it's not an official forecast, right? But I'm telling you, Powell's going to bring this up one day. One of those meetings, he's going to bring it up. Anyways, they say, look, man, the model forecast uses data released through 2022, first financial quarter, January, February, March. Banks thinking 3 months. And then we have January, February, March, and then April, May, June. We're about to come to the end of the second financial quarter. I've told you guys before, from an economic textbook perspective, we need two negative financial quarters. Quarter one was negative. If quarter two ends negative, we then have a textbook recession. Recession is already here, but for the government to clear, for people to start using that term accurately, they're trying to buy time. They need 6 months basically of dangerously low economic activity, right? And we're coming close to that right now, right? 6 months, because one financial quarter is 3 months, right? So they're basically saying this is what this data is looking at. Now, here's the important part. The model outlook is considered more pessimistic than it was in March. What happened in March? In March, I called for a bottom. I said markets are about to have an incredible bottom. On the 14th of March, we go to your Nasdaq, S&P 500, Bitcoin. These are 2-week rally, right? So these guys are saying, actually, even though that happened, things have become so negative since then that the projections that Powell gave us, the summer economic projections, the very first time Powell increased the interest rate, right, to 0.25% or 25% base points in March, right? That forecast, those projections are off. Let me pause here. Some of you are about to do a very dangerous thing. Right now, YouTube is known for analytical data for a content creator like me. I know what videos people watch. I know what videos people don't watch. I know even in the videos that people watch, how long they watch for. I urge you, if you're here just for signals, you are missing. This is it. This is important. Right, so on my graph, when I look tomorrow, I'm going to see there were so many people online that some people started to drop out. Some people started to drop out. Even though they're not even watching live on Wednesday or Tuesday, they're going to be zoned out of this thing. This is why people blow accounts. People blow accounts for a general, massive amount of reasons. But the umbrella of the reasons why you lose more money in the markets than you make is lack of knowledge. That's why you don't know. Because you don't know, you are operating in this dark realm. You've got a 1 million strategy and you think you're going to become a millionaire. What I am doing here is constantly trying to shine a light so that one day you know more than you know right now to be able to sustain and hold your profits. So this is important. I will get to the signals, guys. I got your back. I'll tell you what I'm buying, what I'm selling. I will map out those zones. We'll go through those assets. But this is important. The people that you claim manipulate the markets, control the world, the capitalists, the top 1%, they have a plan. I'm breaking down that plan so that your trading can be in line with the original source of the flow of money. If you get that right, you're done. Everything is beautiful for you. You will be 10 steps ahead. So please stay with me. Please don't forget to like as well. Don't forget to like as well. Right now. So look, man, March, what FOMC said on March, out the window. Right. Currently, it projects inflation to remain very elevated, right, in 2022 at a 3.8%, up a full percentage point compared to March. So more inflation compared to what we thought was coming in March, right? And to decline only gradually toward 2% thereafter, right? And this is when 2023, and we're looking at some type of normalcy. So 21.1%. Remember, we want inflation at 2% overall annually in America, anyways, for the markets, right? And so they're saying maybe we get there in 2024. That's what researchers are saying right now. Very good researchers. Very, very freaking good researchers, by the way. Right now, this disinflation path is accompanied by not so soft landing. If you watch the video on Wednesday, I say, please watch out for Powell, how he speaks. In March, he spoke about a good landing. Then he said, we'll try and get you to a soft landing. In the previous FOMC, he said that we're going to get you a softish landing. A soft, literally, it was live. I wrote it down on the whiteboard, a softish landing. His researchers are saying, not so soft landing. We are going to get a hard landing. It's more than just Powell is wrong. It's more about Powell is doing his job. He doesn't want to say the blunt, brutal truth. He's hinting at it for those who have ears. We're going to have to keep destroying demand. He keeps saying that stuff time after time, and markets keep doing that. time after time. And these guys are saying, forget about a soft landing is some of your assets are safe. You know, maybe we go down on the Nasdaq 40%, right? S&P 500 were now on 23%. Dow, US 30, 30%. That's a softish landing. Not so hard landing is maybe we destroy half, like 50% across all assets, maybe 60%, right? We really need to get to these interesting levels, right? And this is what they're saying. So their model predicts a not so soft landing and modestly negative GDP growth in both 2022, right, all the way in 2023. Now, what did I say? You need 2 negative financial quarters, Q1 and Q2, to start a recession. Without using the word recession, they are confirming that it's going to be a long, widespread recession. We're looking at about 18 months to 2 years of an economic recession, a global economic recession. And this is just the beginning. All right, I'm almost done. Now, according to the model, the probability of a soft landing defined as 4-quarter GP growth starving positive over 10 quarters. We do the math. 10 financial quarters is roughly about 2 years. Remember, there are 4 quarters in a financial year, so 4 plus 4 is 8. So it's about 2 comma something. No, am I right? Yeah, I am right. 2 years, right? And it's only about a 10%. There's a 10% chance. There's a 10% chance that you're going to avoid a recession. 10% chance. You're 10%. I'm not even going to go into that, right? Conversely, the chances of a hard landing defined to include at least 1 quarter in the next 10, which 4-quarter GP growth points dips below 1% as occurred. And look at that. They're saying, look, Powell, we're looking at this thing, and we've seen this before, looking at the colonial period where a lot of African countries are becoming more independent, which actually created a big fracture in global capitalism. But you're not here for economic history, I know, right? But they're saying, this is, we basically have a model that's saying the same thing that happened in the 1990s, which is the introduction of economic neoliberalism, which introduced structural economic adjustment policies in countries like Nigeria, Zimbabwe, 1991, South Africa, 1996, etc., which explain 20-something years after colonialization why most African countries are still crippled. That's what they're saying. They're saying, yeah, look, man, we've got this thing, and it's looking like the same thing that happened during the 1990s recession. The chances of a duplication for that are 80%. 10% chance of avoiding recession and everything being okay by September. Everything just being transitory by September. You have an 80% probability that things are going to be so bad, it's going to remind you of the 1990s. All right. Okay. And the last thing I want to show you real quick is this. So this is basically a forecast comparison, right? So this is gross domestic product. You can see in March previously, we're looking at almost a 1% growth. That was Powell's focus. And now these guys are saying, yeah, but it's June now, and we're actually looking at a negative 0.6%. And by June next year, you'll be at a negative 0.5%. All right, so this is bad, right? So this is a hard landing, right? Hard landing. Prepare yourselves for that mentally. Prepare your trading for that, right? Stop buying things that should not be bought right now. As a trader, as an investor, that's a different story. All right, and if you really want to look at the credentials of these guys, I live for this kind of stuff. They really know what they're doing, and I don't think they're wrong. Right? I don't think they're wrong. Right. So that's all I want to do today in terms of market sentiment. It's just I'm just reconfirming my thesis over and over again. And my thesis has always been we are in the lost decade. We are going to see a lot of pain. I've been saying this before most people started saying it. Bitcoin 12K is a reality. I know a lot of people are fighting with me on social media, right? And then they just stopped. After we broke through 20K, everyone disappeared, all right? There's even room to drop to 10,000. But we're going to talk about all these things today in the charts, right? I don't want to spend a lot of time more than I already have, right? So I found this very a beautiful, interesting read because I know Powell is not going to talk, talk right. He basically, walk right, talk left. No, he walks left, talks right, right? And that's basically massaging the appeal of the audience based on, you know, governmental policies, blah, blah, blah. So just watch out for these cool things, right? And then real quick this week, we've got not much that interests me, right? But we've got, you know, Reserve Bank of Australia, right? Some monetary policy stuff. AUD is going to dance a little, right? But, you know, nothing too significant. And it always happens at 2 a.m. anyway, so I'll be fast asleep. CAD retail stores value, the core retail value. CPI for pound, that's generally very important. CPI, excuse me, for CAD, that's also important. That's why you'll notice we're going to look at a bit of, you know, pound CAD, USDCAD, you know, type of data today as well in the war room. Power testified. This is probably going to reiterate what it's going to say, what is already said, right? This is Congress, and then Reserve Bank of Australia again on Friday, right? Where the Gov speaks, right? So that's going to be interesting, right? So there's really not much fundamentally for me to focus on this week. I'll be trading my markets as I see them. And we'll come back to the dollar chart in front of us. This is literally when FOMC was talking, I told you watch out for the supply, it got nicked, and price is dancing, right? You know, but right, first chart of the day, first chart of the afternoon is the Nasdaq 100. Now, I did, if you're not part of our public Telegram group, you're missing out because I do more teaching in there than anywhere else. And it's like a weird thing that needs to actually change. I should be teaching more in the private group, but I know they have access to my material, but I really should. I've been devoting a lot of time to try and build a community, right? It's not easy to build a community because I'm generally speaking asking for people to take the time to kind of like read and watch these videos, but it's the only way you're going to grow, right? So let's look at Nasdaq, right? So what I did was when FOMC was talking on Wednesday, I knew that we spoke about the impact, right? That markets are going to be very happy for a short while that it did a 75 basis point rate hike. But markets overall were going to be like, yeah, it's good news that you're now taking it seriously, but it's a little too late. And besides, we hate rate hikes, right? So we were with that type of reaction, on Wednesday. You really clock in to the talk there it was on Wednesday, a very strong upward movement as Powell was convincing the markets that they're taking this seriously, blah, blah, blah. The markets woke up and thought, yeah, we've heard this before, dump, right? And they just dumped, straight dump. Now, as Powell was talking, I was looking at these levels and I remember doing something like this in the live video and canceling out supplies here. And I'm pretty sure I also canceled out this supply. And that's because I was focused solely on the Nasdaq. I was looking at two charts while doing a live stream while Paul was talking. And the two charts were the dollar and Nasdaq 100. What I should have done was I should have looked at a much more sensitive touch. For example, thanks to that moment in time, S&P 500 finally closed in a bear market. So that was probably, the right chart to be looking at the time. Okay. Right, sorry about that. Right, so I was very much focused on this, and what happened was markets actually rallied to reconfirm, right? So if you look at the S&P 500 chart, and we're going to do that in a second, right? Markets turned, so we missed this turn here, basically because I was looking at not the wrong chart, but I'd been looking at a much more sensitive chart like SP 500. Russell would have seen it. Right, and then on the Nasdaq, by the way, 365 traders, you'll remember, this is an original turn, right? And that's why I'm saying it's impossible to have caught this then, right? There's literally no supply that just literally removed the whole thing here. So I was right to warn you guys not to sell there or anywhere there, right? This is a clean original turn, doesn't make it to higher supplies and starts to turn by itself. Now, the much more sensitive trader surely would have been able to get a retest somewhere there if they were looking at this bearish engulfing candle. Yeah, but that was around about 5 a.m. on a public holiday, June the 16th. So I was fast asleep then, right? So it's neither here nor there. But what's about to happen, in my humble opinion, is I'm going to ask us to be more sensitive to the markets moving forward. And what I mean by that is normally when I give out these trading signals, when I talk about trading and I talk about how to move around the markets, this is what I always ask you guys to do. I say, listen, man, there's a supply here, right? And then there's another supply there, and perhaps prices here. my general rules still apply. And what I like to do is I like to ignore the first supply, because I know for a fact that in principle, markets always go for a higher push. Because of how fast things are unfolding in the markets right now, I am going to ask you to be very risk awake. Right, there is no trade without risk management. All trading is a sum total to how a trader manages risk. People will tell you that trading is very risky are people with zero risk management. Most marriages in our day and age, 60% of them result in divorce. And that's actually dependent on a country. Some countries, statistically speaking, are looking at 70%. In South Africa, women are most likely to get, killed literally for just being a woman. The odds are 1:3, right? A lot of things in life are risky. That's my point. A lot of things in life are risky. One of the least riskiest things in the world is trading. If you're operating with a good set of rules, this is the truth. There's never a time for me where I place a trade and I don't know how much I am going to lose. Traders focus always on how much they will make. This is crazy. Your reason for trading should never be based on that. If I'm taking a trade, my main goal is to minimize this. Am I accumulating $100 in this trade? What about 1,000? Whatever the amount is it reasonable? As someone who wants to trade for a living, is this good business practice? Can you keep buying bread as a baker? Let's say you run a baking store. It costs you $500 a month for all your ingredients, all your flour, your yeast, your sugar to make your bread. And when you're done selling this bread every single month, you make $300 every month. And then out of this $300, you need to pay rent, you need to pay your landlord, you need to pay for wages. Do you think your business is sustainable? Yes, the bread is tasty. People are always writing about how tasty your bread is. But is your business practice reasonable? Of course not. The costs to make the bread and the return on profits for the bread don't make sense. Do not take trades that don't make sense if you're looking at, so some type of longevity in this game. All right. So I'm saying this to say, moving forward, I'm going to be very sensitive to the market's needs. It seems like the markets right now, and it's been happening for a while, like about almost a month to 5 weeks, all right, where markets don't really care, that they're in a big rush, they're in a very, very big rush. Any supply to get them to their goal will do, right? I'll be having a pending order waiting here, and then markets will be like, yeah, this is good enough, and then they go, right? So we don't want a situation where 90% of our trades are no longer being tagged, right? Markets are in a rush, markets are keep eating this news, this data that keeps forcing people to capitulate, right, to sell. So I'm saying this to say, moving forward for me as a trader, and I'm just going to be showing you this in today's war room, I'm going to be mapping out some slightly risky, trade plays. And in those risky trade plays, there's a high chance of being stopped out in case markets want to resume the principle of sell really high and buy very low, all right, okay? But we're also going to be looking at some what's called momentum buying and momentum selling. And that's what markets have been doing. They've been waiting for momentums to just drop, right? Versus coming to collect real sell orders there. We'll use those another day. But right now, if the momentum is to the sell side, the momentum is to the sell side, right? So there's something to look at here. I mean, obviously, on the Nasdaq on the 1 hour time frame, markets closed on Friday. I'm not in the trade, and I would not sell here personally. Despite what I just said, I just wouldn't, right? This is a small time frame. Remember, time frames matter. 1 hour for me as a swing trader is tiny. For some retail traders, H1 to H4 are higher time frames because people are entering the 15-minute chart. Right, this to me does not yield any smart decision. Because to take a risk, my next risk will be up here. But when I take a risk up here, I should be very mindful of the fact that markets, it's less than 100 points to climb to a better sell option, right? So I would be risk averse. Some of you do not have the capital to trade indices. That's just the truth. So this part of the video, you are taking notes and you are learning. You're not going to try and trade it, not with limited capital. Some of you have enough capital to trade indices. I want you to dial down those lot sizes so you can live another day. Because if markets decide to stop you out here just to grab real sell orders there, which makes sense to me, then you're in trouble. All right. So this is definitely a much more attractive place to sell. And this is moderately attractive. It's an original turn, massive imbalance. But this is absolutely no good at all. Do I think there's anything, right, that would force markets to rally up like that up there? No, I don't think so. But for the most part, this is an incredible thing to really think about, right? To really think about. Right? I don't know if there's going to be a rally on Monday, Tuesday, Wednesday, but I definitely know all selling here is very much fruitless, right? So now let's just kind of look at Nasdaq on a bigger cycle, right? So it's a daily, weekly, blah, 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 and map up some swing trade ideas right now. Yo, Wednesday. Sorry, just quickly remove all these weird markings. Then we'll talk. Yeah, but look, for intraday, definitely look out for those levels that I've just marked up right now. You will recall on Sundays we look at swing setups, but for intraday setups, that's a good place to look at. When price gets there on the day, check sentiment, look left, look right, and watch out for this original turn. And you know, whatever is going on here between 11,900. I think I wrote down this level in the public Telegram group almost a week ago. I say 11,900 would be a very interesting place, you know, to sell Nasdaq 100. If I do get triggered in there and that place holds, that's going to be my next big swing trade. And then if I get stopped out, then yeah, we're gonna go listen to the big boys and wait up here. But I really do believe that there's a lot of interesting stuff going on there. But let's have a look at the weekly time frame, because you know, Bitcoin, Nasdaq 100, you know, their weeklies are starting to really interest me, right? So on Nasdaq 100, guys, we've got, you know, what is called basically later on. First of all, it was a bullish engulfing pattern, but you can see it failed, right? And so in a downturn, that becomes a very good place to push price up, just so you can concentrate and create a lot of sell orders there, right? So PCP formation, right? And that's just a 365 candle, right? And then, you know, we need another week, give or take, for a full weekly imbalance. For the most part, you know, Nasdaq is still on track, right? Moving swiftly, slowly, and surely all the way down. The ultimate, not ultimate, but the final demand at play here that started this entire channel is just around about these areas, right? Just there, right? So that's why I say, don't forget to always check the weeklies. You know, the same process, because all these assets are at a very interesting place right now. It looks like the weekly demand and the beginning of this ascending channel that we completely filled it up to the core, was at about 1100. So at about 1100 to 11100, right? And markets closed there on Friday and started to slightly push to the upside, like a little bit of an upside movement. Sorry, I keep looking to the back. There's a little bit of smoke that's affecting me coming from the fireplace. And I thought I'd switched it off just before, put out the fire just before the war room. It's kind of cold in Grahamstown, man. Right, so on the daily time frame, right, you've got the situation here. Right, so now that you know that we're sitting on top of, I guess, a weekly strong demand area that started a lot of this stuff, right, pushing the stuff to the upside, and then prices arrived at it, right, but with the bearish engulfing pattern on the daily, right, triggering a new, technically speaking, a new sell pressure level right at the top there, which is very common for markets to do, right? Every time markets arrive at a new demand, you'll see time and time again on the Nasdaq, daily demand was always met with a bearish engulfing pattern. And then what happens? A little bit of consolidation, a little bit of negotiation, but sellers took over, right? Every time that happens, sellers took over. And so we've got a little bit of a play of that right now in the markets as we speak, a little bit of a play of that right now in the markets as we speak. And I would highly advise that you're careful. Those of you who are trying to buy, be very careful. I understand the thesis, all right? But remember, we've just read enough economic data that tells us that in the long term, right, markets have to fall, right? You're right, you will never know which part, where to enter the drop is, especially if you're not a swing trader and you're trying to enter the market on a day-to-day basis, become a swing trader, right? But for the most part, this is where we are right now. So on the H4 time frame, we've got a similar mimicking structure, breaking off in pattern and a retest, and it looks like it might be flirting with the downside. But if you remember, on the 1 hour time frame, I told you stay away from selling in here. This is that 1 hour small place. Rather come wait there. When we have a look at the wait there, so this is where that original turn was on the 1 hour time frame. I'll show it to you right now. See there? That's where that original turn was. When you look at the H4, because a lot of people think, they know where the liquidity is, smart money concepts. It's like, yeah, but supply and demand is the main thing. I hardly ever talk about smart money concepts, especially on my YouTube videos, because of time, right? We dig deep into that stuff in module 3, but also because it's important, but don't get so lost in technicality you miss the obvious, right? There's no very healthy confluence area of basics, module 1 basics, no confluence there. So that with that one, with H1 supply could hold, it could not, right? And so for me, then reasoning is, like I said, that 11,900 area for me is king for me personally. If I was to ever try selling there, and the sentiment of the day, don't say Leroy just said sell blind. You gotta check your sentiment, right? Sentiment of the day makes sense when markets get here. Absolutely, right. Nasdaq 100 is my full attention there, which means I am going to completely ignore this, right? I might take it on an intraday trade, so as in take it, but close it on the same day, right? So markets might want to quickly fill this imbalance. You know, those traders who traded 3:30, whatever, right? So a little bit of a push up. I might take a quick sell, and I'll be looking at where the exits are before we get into my swing sell, right? So that's for now my play. If I need to adjust this trade idea, I will do so in the public Telegram group, right? But look out for this level, right? And we know that if this fails, then we need to go a little bit higher, right? But it's all about risk management right now. All right, so that's Nasdaq 100 done and dusted. Next, we've got our S&P 500 finally in bearish territory, right? No one can now lie behind the technicalities and say it touched the 20% mark, but closed above, right? That window is closed, it's gone and closed. That window is gone and closed. Markets are not at all playing around with that particular window. Where is it now? Where is it? Where's the S&P 500? There we go. Okay, so the analysis I was telling you guys about, there it is there. So this level right here, this is where S&P 500 officially reached, textbook bear market, which is a 20% drop from its all-time high. That's what FOMC talk did. It literally rallied price up into that area. We found an H1 order block, and H1 supplies all just waited, just nested perfectly in there. Markets made contact, markets fell, and that's where you see the Nasdaq, blah, 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 fall, right? And so now, remember these pairs, these assets, the stock indices generally move together, right? And so what I'm saying to you is, well, there's an original turn here at the Nasdaq 100, and right here is where price is today and on Friday, and I'm saying I'm not selling anything there, I don't trust it, right? And so we're gonna have to see if this level holds on the S&P 500, then that means those higher supplies on H1, H4 on Nasdaq might not make it, right? So if markets decide this is very valid, right, to drop from here, then just be careful, there'll be a turn there again. But now we're gonna just exercise the same thing that we did, have a look at the structure, then I'll come down to a full conclusion, right? So you see very similar weekly structures, right? The bullish engulfing pattern that fails and then completely, drops. But I like S&P 500 for the simple fact that while Nasdaq 100 has arrived at the demand on the weekly upward channel on the left that we looked at, S&P 500 is so chilled, man. It's like there's really not much going on here, right? There's a couple of demands along the way. This could be it, but if it is, it's been double tapped right there and there. All right, so that's bound to fail sooner rather than later. There's something going on here as well, right? This could be the next bus stop for this particular asset. And the search goes on and on and on and on and on until we get back to COVID levels. If we go Akini Hashi on the weekly time frame, you'll realize that where price is right now is not even really viewed that much, as a good place to kind of like sit and wait, which means there's still a little bit more drop side to come, right? So I'm bearish. I'm bearish on my indices because of that. I'm bearish simply based on that fact, right? So now I scale down, go to the daily time frame with that bearish engulfing pattern that we saw right now on the Nasdaq, right? And I put a question mark here and I posted on the public Telegram group, right? And this honestly, it really does look attractive. It honestly really does look attractive, but we need confluence, right? So on the H4 time frame, just like we saw on the Nasdaq 100, this area fails us when it comes to confluence. It completely does. We've got a good supply here. It's broken for a higher supply on a lower time frame. I'll say that again. With a good supply that was broken for a higher supply on a lower time frame, right? So, it feels unbelievable, but just like that Nasdaq higher supply from the H4, this will be a good place to wait. This would be a good place to wait, right? Well, will price come here? I don't know. But what I do know is for me to stay a trader and to make money, I have to make the type of decisions where I feel like I've done everything I possibly can to minimize risk on my end and maximize gain, right? I have to make that type of a decision all the time for my portfolio. Make the best decision in the situation that allows me to maximize on profit and minimize risk, right? So anything goes, would be touch and go situation. Markets could rally up to there. Markets could just keep falling down. Markets could fall from there. My preference is markets rally. Even if they use a wick and they close the body here, trigger these sell areas, and then we go down together, right? Why? This is the first zone according to module 1 textbook definition with confluence, right? So inside there, I can start shopping around for some clean trades, and you can see here the 2-hour time frame also confirming that type of bias. Very clean imbalance to the downside, fresh area of value. What's not to like? So that's what I'll be waiting for in the S&P 500. US 30. I was going to post a chart on US 30 to the public social media. I already posted it on the Telegram group, sorry, and I'm still to post it on my social media account. But US 30 was one of the most telling, right? Beautiful big gap on the weekly time frame to finally catch up. Remember, Nasdaq 100 long, deep inside bearish territory. S&P 500 SPY just joined bearish territory. Dow Jones just closed above the 20% mark, right? Just above, right? So we're expecting some interesting drops to happen soon, so that all these big assets are all in bear territory, reinforcing the recession thesis that I have, reinforcing that markets are in trouble, reinforcing what we just read at the beginning of this video, right? And I don't see, how I feel about demands and blah, blah, blah on the other side of a broken trend, right? So for me, like I said, no one's going to believe me on social media, but US 30 is still to fall, is still to really fall. And if you think about it, this makes a lot of sense because US 30 is trailing behind the Nasdaq and the S&P 500, right? It's constantly very much behind. I mean, Nasdaq is almost 40% down from its all-time highs or whatever. So obviously, this makes sense. Eventually, like a 33% drop from all-time highs, right? That's reasonable. It's reasonable given the current pressure, in the markets right now, right? But we do have a gap to talk about in the weekly time frame. So we need to see how they will plan to fill that particular gap, okay? Right, so there you have it. On the daily time frame, we've got that exact same bearish engulfing pattern that we saw in S&P 500 and Nasdaq 100, right there. It's just chilling, all right? And all of this is, after that FOMC speech on Wednesday, right? So you're looking at Friday, Thursday, the green candle is Wednesday, and the FOMC was talking, and then how markets sold off straight after that. On the H4 time frame, we're looking for that magic confluence. You can see that there's literally a blind reaction. It's just a sentimental reaction, but also we need to take note of the fact that all the other indices that we saw, S&P 500, Nasdaq, all of them just outside this area here that we keep talking about. On the H4 time frame, we've marked trading areas. Just above, we've marked trading areas where we're like, okay, fine, but there's a supply up here, so I'm going to wait for that On US30, there isn't a supply. On US30, there is the confirmation of a great imbalance. There's a gap. Gaps are the biggest imbalance when it comes to supply and demand trading. So now we need to find where it was launched, right? So there we go. So on the 2-hour time frame, we finally find significant supply that created a gap. I would not trade the gap. I would trade the filling of the gap. That means I'm going to mark the supply before the gap, right? Which is very much in line with where we want to buy, where we want to sell across Nasdaq, S&P 500, and now US30, right? So I'm going to be trying to take a sell there. And remember, if you're trading like me, you better have the capital to do this, because these are 3 indices that you're trading all at the same time. And in these 3 indices that you're trying to trade at the same time, if all 3 are wrong, if they're all 3 bad ideas, right, bad trades, Leroy is going to move to a higher supply. You might be game over for your account, right? So maybe only take 1. You know what I mean? Just always think about how am I still going to be around tomorrow. Like most of your time, you'll be trying to fill up your account, right? But don't do it drunk. If you're not at a place where you've mastered my module 1 and module 2, you have no business trading. And I mean this, you are in a recession right now. This is the best time to learn. Markets are going down right now. It's the best time to invest. There will be a time where markets are moving so fast, like in 2020. Every time you try and blink twice, thinking you've got enough money to buy Ethereum or Bitcoin, price has already doubled over the week. That's not the time. Now is the time to master your craft, right? So if all you're doing is learning right now, be patient. Your time is coming. Keep building the account. Instead of wasting money, losing because you mastered one rule, but you haven't mastered the other rules. Just dump money to build an account to trade while you absorb information. All right. This is a marathon. This bear market is a marathon, but it is going to make those who are awake lots of good money. Okay, so this chart looks a little bit different because on the H4 time frame, price moves so fast, creating a gap and imbalance that we don't even have an order block on the H4 time frame. Now, here's the risk. The risk is price might decide to fill the gap, close the gap, but in search for a higher supply. All right, so that's always an available risk, something that you can only assess towards time, right? The closer we get there, you're going to look at arrow effect, all those things that I've taught you about, right? That's where the smart money concept comes in now. Those smaller time frames are looking for liquidity grabs, looking for structure, imbalance, how prices come into your levels, but they're very clean. So on US30, very, very clean touch when Powell was talking. Another chart, had we looked at this one versus Nasdaq, maybe we would have been able to see these things coming, because on US30, it wasn't an original touch, right? Markets actually saw a 2-hour order block and reacted appropriately to the 2-hour order block. And before FOMC ever spoke, even a week before the 10th of June, right, Dow US30 made a beautiful gap, right? So this is kind of like my trading ideas, trading levels for these 3 things, right? Now let's get to the monster, Bitcoin. Everybody's talking about Bitcoin. Everybody. Bitcoin this, Bitcoin that. Guys, rule number 1 about Bitcoin. Rule number 1 about Bitcoin. You're going to start to notice more than, I'm not in the buy. I just marked it out for fun, but I'm not in the buy. I've been in a beautiful sell, right? Week to week, Sunday or Saturday last week, up until Friday night, beautiful sell on Bitcoin. You're going to start to notice a trend in media. They're going to keep announcing psychological levels. Bitcoin is now above 20,000. Bitcoin just closed below 19,000. Bitcoin back at 18,000 lows. Oh my God, Bitcoin is resuscitated, now going back past 22,000, where experts say if it crosses over the 22,000 mark, Bitcoin surely is going back to 28,500. Bitcoin now fails to break the 28,500 highs, going back to find support at 2,200. Don't trade that stuff. They're going to bombard you every single hour of every single day. If your algorithm has anything to do with trading, the fact that you're on my YouTube channel, the fact that you are probably in a 2 or 3 public, Forex groups or, in social media, Mark Zuckerberg, the whole world, your algorithm is going to be pushing that information to you. It is to lower you in. That information means absolutely nothing. It's cuck. It's absolutely nothing. It means nothing. It means nothing. Bitcoin is going down because, well, for many reasons. We've spoken about them: inflation, recession, unfilled order blocks, blah, blah, blah. The fact that it's well worth a lot of money. Bitcoin must go down, all right? So please do not expect, say, it can't go any lower than 1,700. Let me show you something that people are saying. Let me show you something. Right, look at this. Look at where we are. We're now at the 2017 levels. I'm on the Bitcoin monthly chart. Right, remember I've spoken to you guys before about flip zones, where a previous broken supply becomes a demand. That's what a lot of retail traders are praying for right now. They're praying that this previous high of the 2017, was a massive time high, right? Because price now has arrived at this high here. They're praying that there will be a lot of juice to push price up. And why these strategies always, last for years, it's not enough to tell people that stuff doesn't work. The reason why these things always last and people think it's a viable trading option is because a lot of these times, these things are actually nested in order blocks, right? And so for Bitcoin, I want you to know, as I have told you 1,000 times on the channel, that we are not going to get away. I don't think we're going to get away without coming to fight down and dirty at the 12,000, 10,000 levels, right? Somewhere down here, right? We're coming here for Bitcoin. This is the first time I might even consider, the pause of a bear market. It will not be the last time. You will notice that inside this bullish order block is another one just lower, right? It's a very complicated order block, this one. It's not a neat, sexy order block. It is a nasty, traumatized order block, and you have to decide to commit to it if you want, right? But there's a 10,000 Bitcoin mark and a 12,000 Bitcoin mark, right? And this is what I think we should do. I'm talking to people who are not even debating that Bitcoin is coming. I'm talking to 365 students who know why we are right? Because when you get into that debating level, time will finish, right? So we've got two levels. We've got the 12K something, right? Then we've got a second order block, which is the 10K something. We've got a simple thesis, buy low, sell high, that we want to kind of like invalidate for the next few weeks on short-term trades, like the Nasdaq, like what I just showed you right now, right? We want to be looking at immediate supplies and demands, right? But on the governing time frame, we never do that. Now, I think we're going to see wherever Bitcoin is right now. So let's say Bitcoin right now is at 19K or 20K, whatever, right? I think eventually, right, price is going to get here. When it gets here, don't be in a rush to buy. Leroy, I'm going to miss out. FOMO is never a reason to jump into trade, right? FOMO. If Bitcoin gets in here at 12K, I am investing. Like I'm going to destroy my at least 60% of my cash value to buy, right? So that's a good low price for me, all right? 65,000. I mean 12, 24, 36, 48, 60, like 5x my money. Yes, please, all right? From the all-time highs, absolutely. Do it. Do it, please. All right. At 12K, I'm definitely dumping in. I'm talking to traders. Remember, there's not we can do investing. Investing, just join the Wealth in 3 Years program. I create documents for you. I email you, blah, 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 blah. And I'll explain the investor's logic right now. Right now, that's for trade. But for trading, you need a couple of things. So you need to see the drop into price. And then you absolutely have to wait for them to give you the confirmation, right? That confirmation is going to be very clear to me on the daily time frame that, yeah, it's time to go, because they could and they most likely will do something like that, right, into a lower level and then start to push from there, right? And this is literally how institutions like to play this game. They will, the few, after destroying 80% of retail traders, the few 20% were smart enough, who understood, blah, 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 they will be tested here. So be very careful with your trades, all right? You're in, you're out, right? You find a moderate daily supply, you take profits. There will be a time, even if we open a Bitcoin trade, a buy trade at 13K, that's a good swing trade position. Don't be too greedy to get the exact low. And what I want you to do when we get there, I will be around to guide us through it. I will be around to the best of my ability. What we want to see is the daily supply pressures that were created on the way down, we want to see these suckers being taken up, right? So you take me out a sucker and you create me a demand at 12K, I'll believe you. But if you come to 12K and you don't take out a daily supply and you equalize it, I'm telling you, you're going to go down to 10K first. All right, so just be very aware of these levels, right? Over time, they will not have your best interest at heart, right? So just be very sober minded, right? So that's point number one about Bitcoin. A lot of retail traders are hoping that this bounce will happen. Point number two about Bitcoin: everything is so bad, everything is so gloomy, everything is so negative, right? It's easy to forget something important about structure. Look at the structure. We're on a weekly time frame. I understand we're bear and I understand we're going down to 12K, but don't count out weekly demands. Never do that. Never make that mistake of counting out weekly demand. You see how this candle is right now, big and full, right? This candle 3 days from now could look like this. You see what happened there? The next candlestick will just be a long wick and a small head, right? Because all this hidden demand in here can be sucked into a weekly candlestick pushing price up. And if you're trying to sell right now, right, trying to get some money by selling right as a trader, you could get burnt. What are the rules? What are the module one rules? Module one is supply and demand is the way to go, but we never buy inside a supply and we never sell inside a demand. Why? Because that's just contradictory. You don't mix oil and water. Okay, it's contradictory. You don't. We want to stick to the cleanest way of trading. That's why when I sold somewhere there last week, Saturday, I had to take profits on Friday. I had to close because we're now outside of the demand. And today is Sunday, it's a Saturday. I had to close my trade there because we have now arrived in a very interesting area where supposedly the imbalance right now is leading to the buy. Now, do I think it's the buy that's going to change the world? No, I don't. But I know it is the buy that can reverse gains and profits that I've been holding on myself. Now, what could happen here is Bitcoin could go up there and we start to sell. And that's what's been happening, right? A part of me thought, don't worry, there's a demand before this high on the left. No time to show you, but it's there on the left, right? And I thought, okay, cool, markets should do this, and then I'll sell again here. That didn't happen. So I just started hunting for H1 sells as the price was dropping, momentum selling. All right, it didn't happen. And I'm saying to you, yes, there's a chance that markets might want to just pump up all the way there and then sell, but it comes with risks, right? It's too close to a weekly demand. Weekly demands are notorious. Let's go through the chart. Weekly demands, even in a bear market, are notorious for wanting to spend, wanting to attract. There's a lot of things I could talk to you about crypto. A lot of things, but I'm so scared. Check the time. Happy Father's Day. Yo, 365 fathers, shake my hand. Well done, sir. Well done, sir. And if you feel like you're not doing well, you'll get there. Well done, sir. Every day and everywhere you're getting better and better as a father. Every day and everywhere you're getting better and better as a black father, white father, sure, all fathers. But yeah, well done to every single one of you fathers. It's a big deal. So that's why today I'm a bit worried about time. But yeah, wishing you all well. Right now, look at this weekly demands, very notorious in Bitcoin, right? Weekly demand taken out, weekly demand bandage, rally, weekend demand taken out with a very long wick, bounce back up above the multiple different demands taken out, only to last 1 week and then we get a full sale, right? So I'm not in a rush, okay, to say this level is going to be taken out. It could be by the end of the week. That'll be good, right? This bear market is meant to last for a very long time, believe me. And to me, it feels like it's happening fast, right? This is quite fast. I mean, week after week, we're taking out significant areas. This is just 2 weeks. 1, 2. In 2 weeks' time, we broke the biggest psychological level on the chart, was 285. And then there was the 21,000, microsurgery level where people thought a lot of companies were going to get liquidated, and some didn't, right? And markets are just filled all these buys like it's nothing. Okay, so be mindful of that, please. All right, so now with Bitcoin, there's one more very, very important thing I want to talk about, right? So I will be going very, very, very risk away here, right? Maybe, reduce the lot size a bit. And I've already got my standard lot sizes up here, right? In case in the event this doesn't work out. And remember, this is a nice thing about becoming profitable, right? When you become a consistent profitable trader, you're not thinking about your capital in the way a lot of traders think about their capital. And this is why I always tell people that these people are telling you that you're going to die poor because you're good with risk management, because you're going 0.01, because you only have $100 US. Don't love you. They don't care for you. And that's because you're not supposed to be rich overnight, number one. Number two, there's actually a system. Every time I make profits, especially when I sell crypto, and I've been doing that a lot of late. And I've been honest about that also quite a bit on the channel, right? 40% of the profits I made, I mean, I think, and I can't remember, but I think I made about 2,800 US dollars, point something, right? On that weekly sell, the Saturday to Friday sell that I just got done right now. It's quite a simple process. 40% of that, of my profits, go into buying. I'm dollar cost averaging, simple, into BTC. And then 20% of the remaining profits go into a specific altcoin. And I do this all the time with my profits. Go into some type of altcoin, some type of projects, and then the rest right now, since about January, February, I hold 40% I keep as cash. I keep building a cash reserve because there are significant levels that an asset like Bitcoin, Ethereum will get to. For example, 20K was a significant level. Well, I was like, oh, no ways. I need to invest more now. And you buy into this more. This is not advice. I run a channel. I share my strategy. I share where I want to buy or trade, and I tell you how I'm investing. You decide what you want to do for yourself. I might be in a better position to do this. I don't know. My point is you should be getting closer and closer to here, to this life, where the money you're using to invest, buy assets, is money coming from your trading account. The reason why a lot of you are not there is because I suspect the money you put into your trading account stays and goes to your broker out of losses, and so investing becomes a distant dream because now you need cash from another source. And if that's the case, just stop here. Stop trading. Learn. Master the stuff. Literally sign up for the course, and if you're in the course, really take the time to hear what I'm saying. You have to master the stuff. You absolutely have to master the stuff. Once you master the stuff and the trading starts to produce money, you take this little money and you make more money. I don't want to say it's a simple thing, but it's just how it's supposed to work. I don't find extra places of income to invest in. I use my trading skills to buy or sell asset at a leverage price, right? Supply and demand level, and then go and invest in things I know have value. Bitcoin today is at 18,000, whatever it is. That is the price of Bitcoin, not the value of Bitcoin. As a trader, I am selling, but because I understand the value of Bitcoin as an investor, I am buying. Do you understand? Right, but you got to get this part right. You're trading right, hence the war, right? So sorry, I got distracted with that point, but I think it's absolutely important to remember that. Now, if you notice that all these bounces are happening at daily demand inside that weekly demand that I spoke about, I feel like I spent so much time on Bitcoin. My goodness. Happy Father's Day, fathers. Happy Father's Day. Do your kids have a wallet that you are watching over? Your kids will never be born in another time like this where cryptocurrency is this low. They will never be born in a time like this. They will never operate in a time like this. There's never going to be a bear market like this for your children, sir. Never. It's on you. The next generation of your family is on you. It's up to you. I'll move on. Right. Anyway, daily demand tag. Right. So that's where it is at $18,300 tag. Tag very deeply. You can see those wicks between the two lines. Next daily demand is at about 17,470. Right. The next daily demand is at 17,470. This is the last daily demand inside the weekly demand holding price. If this daily demand here breaks 17,470 to 16,222 breaks, yeah, there's going to be a lot of noise along the way, 15K like this one. This is a lot of noise. This is big noise. This is big boy noise, right? 13,000 US dollars, blah, blah, blah. Right, so some markets are going to play around there. You're going to be watching the supplies that are being formed as markets are dropping, and then there's going to be tennis between supply and demand. I'm going to be on the sell side, maybe on the buy side. And so that's the full update for Bitcoin for the next 2 months, for the next 5 weeks, right? Since I've told you all these levels, please write them down, please be mindful of them. But sir, because it's Father's Day, your children will never find these assets this cheap ever again. Bitcoin has a finite supply. Most of it has been mined. Most of Bitcoin has been mined. It's out there. In circulation, there's very few. So your 7-year-old, your 8-year-old, your 10-year-old, your 1-year-old, sir, they're relying on you to build wealth for them. There's no one who can do it for them. They're too young. When they're old enough at 18, Bitcoin will be over $1 million and there'll be none to buy. It will be in the wallets of those who are making hay while the sun shines. Happy Father's Day, sir. But to your children, do you have a dedicated wallet for your kids? And please, this thing of wallets, you need to make a video around this as well. Time. Let me put it this way, real quick. If you don't own the keys, you don't own the crypto. If you do not own the keys, you do not own the crypto. Man, I'm taking too much time on Bitcoin because of what's going on, right? Because of the recession, because of the collapse, because of the inflation, blah blah blah. We saw Celsius, doesn't want to do withdrawals. Celsius is a company that borrows. I mean, it's a very complicated thing. I can do a video on that another time. But you have to stake your ETH, blah blah blah. Goes to ABI, blah blah blah. It's like a whole thing, right? Binance at some point they want to do withdrawals. Coinbase is firing people. Coinbase, let me tell you something about Coinbase, right? And I know the question is going to be, well, really, where should I put my coins? Well, I should dedicate the time for that. I also just want to say one more time, link in the description. Just click on the link that says Wealthy in 3 Years. That's a phenomenal program. What happens there is, when I'm ready to invest, normally month after month, but because we're falling like this, and I'm waiting to get to secure levels, and we're shaking off altcoins, we're shaking off DeFi protocols that are absolutely useless. I'm watching the gaming part of the metaverse and blah, blah, blah. All the useless projects are going to die. All the useless NFTs are going to die. They're going to die. And what happens in the Wealthy in 3 Years program is, I tell you what I think is going to live through this bear market, which is very cheap right now. Buy into it right now on a month-to-month basis or whenever it is, and you're going to get 12 financial notes from me. That's how I calculate 1 year in the Wealthy in 3 Years program. It's not month after month, right? It's month when I invest. Otherwise, if I just do it month after month and tell you to buy this, buy that, sometimes you'll be buying into things that I don't have my own money in, and that to me feels immoral. We don't trade for you. You don't send us your capital. That's how it works. Anyway, the link is in the description. But I want to bring out a couple of things because this is not the platform and the time for this. Number one, when it comes to crypto markets right now, whether you join the Wealthy in 3 Years program or not, because some people like to do their own thing. Stay away from stable coins. Don't worry about the yield farm, 7%, 10%. It's just not worth the risk. Stay away from stable coins. In fact, you should know this, but if you don't know, it's a no one told you. Yield farming, guys, only works well in a bull run, in a bull market, right? Otherwise, what on earth are you doing? Okay, so be very careful about this. Yield farm only in a bull market. And the last thing, which deals more about where to hold your crypto, simple. Not your keys, not your crypto. Repeat after me. Not your keys, not your crypto. One more time. Not your keys, not your crypto. In trading, no supply and demand knowledge, you are liquidity. In investing in crypto, not your keys, not your crypto. And what that simply means is platforms, which I've used many times, very expensive actually, but I've been very smart to slowly start to get out of that platform. Coinbase, and there are many of them, right? Coinbase warns users could lose their crypto holdings if the company goes bankrupt. Not your keys, not your crypto. Now, how does this work? If you open an account with Coinbase, like I have one right now, like I've got actually my partner opened one for as well, right? And you deposit, right? Because you want to buy crypto there. You think it's your crypto. Not really. There's a contract in the terms and conditions of a lot of these platforms where you're actually classified as an unsecured creditor. You're an unsecured creditor. Creditors are people like you and me, where we're retail traders, which means then the transactional relationship here with Coinbase is quite simple. You are depositing money to buy cryptocurrency, but Coinbase actually legally sees it as you borrowing them money to run their investments, which you then, benefit from in a bull market. In a crushing recessionary market like this, where crypto is extremely fragile, right? If things go kaput and the company has to go bankrupt, you are not getting your money, right? Your money is part of the collateral, because remember, at the end of the day, legally to these platforms, you are an unsecured creditor. That means there is no insurance on your deposit. So be careful where you keep your crypto. There's a nice way to keep your crypto where your crypto is with you. And the only way to answer that is not your keys. Do you own the keys of your crypto? Because if it's not your keys, then it's not your crypto. You will lose it all. Fathers, mothers, brothers, sisters, I have to move on from crypto stuff. Not your keys, not your wallet though. Right, I promised to do a video and write it down, another video on this stuff. And we map out stuff. I mean, I've got a ledger, I've got there are different ways to make sure you own your own crypto. All right, but remember, this recession is here to shake things up completely for every single person, right? So please don't sleep on the programs, don't sleep on information. And when you get this information, act on it. Act on it. This crash is happening very fast, which is two things to me. It means, number one, it's deeper and longer, so more brutal, because these levels, we're supposed to be getting to these levels, but my goodness, already now in June. Come on, man. The man just went 75 basis points. I explained to you guys how far the interest rate is from reaching inflation. This is what the 75 basis point rate hike can do. What are you going to do when the man gives it to you 4 times before the end of the year? What if it goes 1 full point in October, August? In August is like a crazy month, September, sorry, because that's when powers like definitely the numbers show that inflation has peaked. What happens then? It gets there in September and inflation has gone up even more. It's like, I have to Paul Walker, you guys, we're going to go 1 full point. Where will this thing land? So it's moving a bit fast, all right. Ethereum, I talk too much. I apologize. I might not even make it to the full list of assets I wanted to look to. I'm only with you for another 30 minutes. Right. So you can see here for yourself. I'm not so sure if there's a lag in my video. I apologize. But there we go. So Ethereum has cleared these levels, right? Looking good, looking juicy. Okay. And what I like about Ethereum, by the way, traders, especially for traders, Ethereum has got less BS levels. So it doesn't have all the unnecessary demands that you see on Bitcoin. Bitcoin, you'll find multiple demands, and Ethereum will have 1 or 2 per time frame. All right, Bitcoin will have 3 or 4, some especially on the daily, etc. Right, and if you look very carefully where we are, right, remember Bitcoin is currently at a weekly time frame right now. I just drew it for you. And Ethereum is like, yeah, bro, I'm also at a weekly time frame, but I've broken it. You guys with me here, right? You see where this is going. Some charts become primary mirrors for other charts. Ethereum is like, away we go, and away we go fast. They've already removed the weekly demand. Yes, Bitcoin might rise a little bit from its weekly demand, so we'll see retracements in things like Ethereum. But I love Ethereum so much because it loves not to waste my time. Right, so on the daily time frame, now that I know there isn't a weekly demand on Ethereum, right? And this is where the end of that weekly demand is. You can see Ethereum's next bus stop is all the way down there, literally give or take $700. And right now we're at about $1,000 US per Ethereum coin. So the question is, do we take a risk here? Risk it all? Will this rock? And it's a hard answer because once again, Bitcoin has not removed its weekly demand. But this is what Ethereum is saying. It's saying, oh, while Bitcoin makes up its mind, I'm going to be stacking up the order blocks and the sell pressure. It would be an incredible force of nature and a miracle for Ethereum to get back up to 1.7 before dropping again, which means if you were me, or rather not even me, but a betting man, someone would be selling right now or waiting to sell there. All right, this is what it looks like. And the next good place to take profit is right here. Okay, that's Ethereum for me. That's what I'm telling you. That's what's happening. That's what I'm seeing right now on the charts. Moving on, the dollar, DXY. Right, guys, because of time, when I'm done with teaching, I really hope I've given you guys some insight. Some incredible article that I read earlier on as well, by the way, from the similar researchers. They're pretty much saying this market crash is moving faster and specifically collapsing 3 times faster than the dot-com bubble. 3 times faster. 3 times faster. Learn now. There will be a day where markets can't be tamed, where you'll want your money that you've put aside in the correct projects to be making more money and more money for you. This just happened in 2020. Bitcoin was 4,000, 3,000 US dollars in 2020 and went to 65. Don't sleep on this period. I've told them 3 times, God. I've told them 3 times. Done my job now. Right, let's look at the dollar. I've been talking about the dollar for a while, uptrend, blah blah blah. I would love to get a good trade in arbitrate on the dollar. But we're going to look at the weekly chart. I just want to point out something very important on the weekly chart. I also want to point out this because I've never actually explained it to you before in a war room, and I really want you to. On Thursday, when I looked at the DXY chart, this green candle was very something like that. So all of this above hadn't happened. So you had just had the body, right, up to that level and a long wick to that supply. And you can see on Friday at market close, the green candle, right? Remember, green candles open at the bottom, close at the top. This is so important, right? Where candlesticks open and close is very important. Open, close. Remember, you buy low, you open low, you close. Red candles, complete opposite. Red candles open at the top but close at the bottom. Remember, for red candles, you sell high, which is where they open, and where they close at the bottom, right? So now this green candle has now done something very interesting. Remember, prices at a supply, at a governing supply, weekly supply, daily supply. And we've been here before with the DXY. We've been there where it broke this supply, broke another supply, and now it's made contact with the new supply. And I have in front of me a weekly DXY chart that seems, all right, there, to have closed above these highs here. So had it closed below, all right, which is what I thought was going to happen on Thursday. I haven't taken this chart since Thursday. Had it closed below this area here, this was going to be a very tough week for the dollar, right? The dollar was going to have to move down. But now, price closed here, right? Slightly above the close of the previous highs, all right? So this now, for me, gets me thinking, all right, cool. Then thesis might have to change. We might see some push to the upside again to test these levels. But it's not as simple as all the other DXY trades we've taken in the past. Because even if we're seeing some upward tick, right? For me, I always get paralyzed by my rules because I can't do anything in the yellow zone. I cannot buy in the yellow zone until the yellow zone is removed. And it's kind of annoying now because I've been waiting and waiting for what feels like forever now to get back into some very long-term buys, literally on DXY, right? Not just on currencies, but on DXY. All right, so please look out for this on the daily time frame. Look out for how this week is going to shape up. But a couple of things to let you know that markets have are hinting on what they want to do and they don't want to do. Look how carefully they avoid engulfing this candlestick. No bearish engulfing here. So therefore, right, if this is a turn, we need what? A specific type of imbalance, right? And that's been invalidated at the moment, right? So there's a weak imbalance, nothing to hold waters by. I still have my pen in order all the way down here, which would have made more sense if markets had closed below the previous week, but they didn't, all right? And that's fine, such as life. If I draw in a bullish Fibonacci, which would be from bottom to that daily supply area that's been tagged right there, you'll see that markets have taken the favorable 50% retail area, which is half price, 50% discount, and then they've rebought again on Friday, right? Strong strength on Friday. And if that continues, well, then markets need to come retest some supply areas, right? So for me, I get paralyzed. What I wanted, what I hoped for was a weaker dollar this coming week, pulling price all the way down so I can buy at much more safer levels. I would have happily bought somewhere down here, happily bought somewhere down there, definitely waiting to buy there. But right now, I don't know. Dollar is just hanging, right? It feels like it's in front of a lot of sell pressure, but looks like it does not want to sell yet. It doesn't want to give up that grip that markets have, right? And the sell-off was triggered, obviously. FOMC, the rate did go up, but the dollar went down for 2 days because it made contact with the supply. But as the dollar started to price in a 75%, so a 75 basis point rate hike, right? That's the question. Because if it has priced it in, we're going to see a movement to the upside, all right? This is a reaction to a supply. Structure comes first. That's why module 1 is important. But sooner rather than later, dollar's going to be like, hell yeah, stock market falling because I'm in charge right now, right? So be very, very mindful of that. Right, next we've got pound USD. Don't forget to like if this is helping you. If this is helping you, like the video, man. If it's really, really helping you, share the video in your timeline. You know, we grow by, word of mouth. Honestly speaking, I have no marketing strategy. I don't have time for that kind of stuff. Looking for organic growth, so people who know us, who can represent us and speak for us on our behalf. That's the biggest thank you. And I would truly appreciate that kind of stuff. Please share our work as we build a community onward and upward. Right. So pound USD, interesting chart. Finally made contact with the big governing demand. Has been there for a while, but then broke. It's like, oh my God, we engage a buyer now. Let's go nowhere, right? And I found that quite interesting. Very difficult to read this level because all of this is green. There's no structure, right, in the weekly time frame. Right? There's no, okay, this is an immediate weekly demand and there's a lower weekly demand. It's just one big candlestick, right? If you go on the daily time frame, you will see, it's free fall, right? Markets are currently just doing what they want when they want based on reaction to the dollar. Because there's no, all of this is just one long green candle on the weekly time frame, no on a governing time frame. But if we're looking for confluence, the next real buy area in pound is all the way down there. All right, so this begs to make me wonder, well, where's price going right now? Why is it going up? And the question is, it won't stay up for long. I don't think it will. All right, I don't think it will. I think it still needs to collect some buy orders down there or break through, right? So we're at this weird cowboy area that broke a supply. Markets kind of like hit it. I don't know who traded this. This was really more part of an intraday play, but it turned out to be a very beautiful swing, all right? But I have it marked up in red because for me, very cowboy, very, very advantageous area. If markets distribute a little bit more to the side as they go up, then maybe well worth the risk, all right? But remember, there's a very high risk area. You're also going to have to look where Euro USD is in relation to when price gets to this area. So what that means is you want to find at least a valid Euro USD daily supply that would kind of like instigate that, the same type of momentum, right? Which means really the bet here is for the dollar to keep going up and for all risky assets to keep falling. If that makes sense, sounded like it made sense to my head, right? Then of course the usual swing trade ideas that we have up there that are still waiting, right? We've just been very, very negative, right? But selling anyway in here is disastrously and crazy. So that's why I would like to see more upside first, and then I'll sell on pound USD. Could take a day or 2 or 3, just depends on the dollar. So next chart there is USD Swiss franc. Oh man. All right, so remember we've been strong on dollar, right? DXY, and for me, like I said, this would be a very good place to buy, and I wrote high risk. Right now, let's assess if I have no USD Swiss franc trades running, so it must mean that my pending order most likely was not triggered. All right, and if you see here, the turn was just above. Can I quickly check, guys? I'm just quickly going to open my live account. I don't think I've got a USD Swiss franc trade idea, and so I probably put a pending order just outside my area of competition there, and you can see markets multiple times gave me a chance, but never really got down to it, right? So nothing happened for me. Price did not, trigger me, and then for the most part went up. Short straight through, matching, that dollar straight that we've been talking about for weeks and weeks and weeks and days. I can remove these intraday levels. Just give me a second. All right, and now price then came back straight down, right, into what seemed to be a new demand, a higher demand, a little ladder that has been created here. The imbalance is literally matches up perfectly. I also missed that entry, not in it, and there's really not much to do now, right? Obviously, if you go to intraday levels, there definitely there's a lot to do, right? We can find lower H4, H1 areas and hope to swing them to the top, right? So I'm going to start off with H4. This is where we are on H4. I'm going to tighten this area just a little bit. Fantastic. And then I'm going to open a new buy order block right there. And then it seems like on Monday, you might get a visitor, right? So it just depends on the strength of the dollar. Like I said to me, it seems like, I just want to check on my live account if USD Swiss franc is actually triggered, but I don't remember seeing that in my notes. And my trading journal is in front of me. No, yeah, I don't think I am, but it'll be nice to just make sure I am reporting the truth. But I definitely don't. If I am, that would be a very nice good trade, and I don't think I'd have missed a very good trade like that. Right. Anyway, so intraday, this could go. This could go. High risk though, but it could go. Why am I saying high risk for? Because they are better lower levels, right? But this doesn't change. Let's see what time these order blocks were made. 11 a.m. So this is after the madness of the 9 a.m. morning rush, right? So markets open somewhere here at 9 a.m. push price down, the London low, right? London session likes to make the lowest lows or the highest highs of the day, and then the New York session takes over, right? Markets didn't really arrive at a supply, so you might get a nice clean retest somewhere here on the H2 time frame now, just to get a bit of clarity. And this is a good area to try to risk it all. I don't trust it at all, but this is a very good risk it all type of area, right? I mean, if you have a very tight SL stop loss, just accounting for the left, so always account for worst case scenario, this being a proper low that markets might actually want to resolve. Looking at a 1:6 trade idea, that's a beautiful trade idea. Like, I mean, if it works out, that's a beautiful trade idea. But why I'm a little bit of a skeptical is because, well, it was never the place where I thought price was going to turn. I thought price was going to come here. It didn't. Let me just quickly have a look. Currently running gold, EURGBP, Yeah, no, I literally am not. So I was not triggered in USD Swiss franc. I was not triggered in USD Swiss franc. Right, and it's just part of the game, man. Right, so those of you who are optimistic, good luck, try there. I'll try there with you, but we could potentially get stopped out, right? Well, we could potentially get stopped out, so just don't forget to bear that in mind. And if you really drill down too much, you might get left behind, right? So keep the area of entry at least at an H4 level, right? To be honest with you, even the area of competition demands that we start buying at that level there. But again, it increases your risk, reduces your reward, and this could all be for nothing, right? So you're now looking at about a 1:4, right? Still good money, right? And just be mindful of that, right? All these supplies are broken, so we need to correct that on the chart as well. It's been a while, right? This daily supply here was removed a long time ago. Okay, this daily supply was removed a long time ago. And it seems like markets may have favored something like that, a higher supply. Like that, right? So just be mindful of that. And then I mean, if you're buying from H4-ish, again, you know, even this is not a good place to sell, because we'll have to see what the dollar is doing when price gets there. All right, but this would be a very good place to be mindful of that, you know, all buying should potentially just be stopped, right? But this is interesting, right? If the dollar decides to fall and vex you, then it goes back to most likely get triggered down here. This high risk, and then I told you that the true swings, the weekly buys are even lower. All right, so that's USD, Swiss franc. I hope that made sense. USDCAD, it's been a while since I've been in this trade. Made some good money the last time. We had a good swing idea, and it also another buy swing idea. Somewhere, one of these buys we definitely charged. Right, it was down here, right? A clean buy. And then I wrote here, where is DXY now? It was an H4 order block. I said, when price gets here, check where DXY was. And clearly DXY was nowhere close to a demand. So price, you know, went down this area. It's in gray, which means I never took the trade. And I remember telling you, only take the trade when you know where DXY is. And then since then, you know, markets rallied. And you can see with USD Swiss franc, right? It's a theme. Where when markets got tired of falling, they quickly ran out without us, right? Maybe, no, even if you switch to, what they call the game, Akinahishi candlesticks, right? They would have not been able to catch up with this thing. Right now, USDCAD is looking very prime, you know, very, very good for an upward movement. But we need to start off with the source. Quickly, I'm linked to the wrong account. It's fine. I don't need the presidential chart right now. Right. So look at this on the governing time frame. Right, bullish engulfing pattern. It is the 19th of June, so we still have to wait for this candlestick to close. But right now, it's promising more pain. It's promising long-term pain. To be honest with you, right? And markets, remember, have been flirting with this idea of being very, very close to a supply. Depends how you look at it. If you look at the supply based on the doji, if you look at the supply based on the 365 candlestick, then you'll see we've made contact, right? So the month of June is going to present an interesting close, right? Either markets slow down or markets maintain the integrity of a bullish engulfing pattern, which comes from this bullish engulfing pattern, which comes from this bullish engulfing pattern, which comes from this bullish engulfing pattern. And that's why we've had an uptrend on USDCAD for the longest of time, right? Pattern after pattern after pattern. When you get a bullish engulfing pattern, it needs to get tested. When you get a bullish engulfing pattern, it needs to get tested. When you get a bullish engulfing pattern, it needs to get tested, right? And markets can move on, right? But the supply is, you know, locked and ready, right? President of the United States, Joe Biden, is busy falling off bikes. I don't know if you guys saw that stuff. You know, people like maybe is paying homage to the stock market, but you know, as long as dollar strength continues, then this plan is not going to be a problem, right? So, I mean, I don't know if there's anything you want me to do on this chart. Sorry, before I move on, I need to dig deep, right? But we need to see a little bit of a retest, right, on the weekly time frame. The swing, right? I've mapped out a couple of things to do, right, on USD Swiss franc. Right, the swing idea is here, which I'm pretty sure would be a retest of the governing bullish engulfing pattern. Now, it's actually quite deep inside, right? But this is where the swing idea is, right there. That's the swing idea. Make that green. Switch to daily. And then it just gets complicated from there on. We've got a PCP right outside a supply, and a supply here potentially broken, right? It's hard to tell, but this looks like it finally broke the supply. But if you're looking at the daily time frame, honestly speaking, markets are not playing with you, man. You have to wait for a deep drop inside this area of value. Will that happen? I don't know, but that's what markets are saying. Markets are saying you have to wait for a deep a drop into price, right? Creating a PCP here could be a part of a very big problem for you later on, because markets create a PCP. Please note that you will just need a confirmed imbalance for markets to go up and up and up. Then you can retest this area as a potential demand zone. And if you look to the left, there are multiple supplies inside this governing supply on the day. Is where price is currently kind of like fighting with right now, right? This little, you know, wage pattern here, right? And you can see in there, then there's this crazy idea of a supply, which technically speaking is this high. Very crazy, very ridiculous. And then there is obviously the original turning points of price up there, right? Clean touch that started the mayhem to the downside, right? So honestly speaking, this is a chart that I'm not that excited to trade, not in a rush to trade, but if markets do come all the way down there, sure, I'll buy. Just like how I had to wait for markets to come all the way down here for this beautiful buy, I'm gonna do the same thing. I'm just gonna wait. But markets could, after 3 or 4 days, buy from this level, which I won't be a part of, right? Just because I'm buying too close and into a supply, not part of the rules. The rules need me to make money on a better risk reward allocation. Follow the rules and I'll be just fine, even though the rules require me to be patient. There'll be other things to trade while I wait. USDJPY, a trade that left me, and you know, I just missed it, man. I just missed it waiting for perfect low buys. Price just broke out without me. We've spoken about this many times, monetary policy divergence. I put out COT data on JPY a couple of days ago on the public Telegram group, just showing you that these guys are just maintaining that course, right? This to me looks like a broken governing supply. So cheers, gone. Right, and because of that, you know, the next big target for USDJPY, which I'm pretty sure the price will get there, is 138.453. I repeat that, next target is there. So it's essential for us to make some money. We got to get into these lower buys. Right now, on the weekly time frame, only place to buy right now is here. And I still stand by that. Why? Because markets, and Leroy, what? Yeah, they might get there without us. They might. For me, it's that simple. I keep it simple. Right. But you know, we have, like I said earlier on in the video, you know, we've been missing out on a lot because markets are not coming. So indices are not making their time to make it to higher supplies. And then the risk off assets, right, because we're very risk off right now, are just running, not even coming back to collect lower buys. For example, here's a beautiful lower buy. It's marked in red because there's no confluence, right? There was no, I remember this, there was no weekly confluence with it. It was just there in the middle of nowhere, right? Almost like a flip zone, right? Like, break the highs, blah, 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 buy here, right? The markets didn't even bother to come there. Okay, and here's Leroy wanting markets to come lower, even lower. Right? So markets might not do that. So you take your risk calculator, you calculate your risk, and then this could be the trade for this week. If dollar is strong this week, this could be the trade for this week if dollar is strong, right? So be very careful, right? Look at this, boom, bang, boom. All right, simple. Okay, but yeah, also not simple is better, bap, boom. Okay. No magic wallet here, guys. Just risk management and clear trade setup. So if you're desperate to get into USDJPY, then there's also another buy opportunity there. Just risk appropriately. Live to fight another day. If you have a small account, then only choose setups that are high probable. You don't have to trade all 13. Okay. So we've done USDCAD, we've done USDJPY. I can go down to H4 just to appease 1 or 2 people, but otherwise, you know, yeah. So on H4 time frame, you're really looking at a nice underdog touch. All right, at least you got a broken supply there, you know, but this high was not broken. So maybe on H4, maybe. All right, so just be mindful of that. And if that breaks, then you go back to the original idea of waiting down those lower daily buys that I mapped out. Right, pound CAD. Okay, so we mapped this out before in a war room. We are waiting for markets to see it. You see how on the daily, at some point, they'll be like, did he say that? Did he say that? Then they'll be like, did he say it? And I'm telling you, I did. I just don't remember when. But if you give me a second, I'll tell you, because I'm very organized. War room 67 on the 15th of May, we looked at pound CAD. War room 67 and War room 66 on the 8th of May, we looked at pound CAD again, right? And on and on and on. Right, and War Room 64, 24 April, pound CAD, right? So we've been waiting for this markets to break structure the downside, hence this downward movement. Then I said price will push up to the supply, and that's what we're waiting for, right? So markets have done that, push to the downside. now come slowly but surely making their way up. PCP on the way to ensure some type of distribution. So we don't have an arrow, a direct arrow, but our area of supply still remains high risk, very populated, very not nice. But let's just do one more big analysis on it to see if our bias might have changed, right? Okay, why do we want to sell, not buy? Why do we want to sell, not buy? Because we are silly. Is that it? I don't think so, but it looks like we are a little bit silly because prices leave in a demand or arrive in a demand, but this demand is overplayed, all right? That's why. So I put a cross here to show you glass effect. Demand, someone, yo, goodness gracious, someone on the volatility, whatever, that Facebook group drew a supply, random supply on like 15 minutes on V10 or whatever it was. And it was like, you see, smart money concepts don't work. Geez, man, where's your multiple time frame analysis? Where are your area of value theories? There are a lot of things. You don't just find what you think is a supply or demand. That's not even a confirmed supply or demand, and then say the whole thing doesn't work. Right, so I'm just gonna quickly remove these arrows because I can't see. Look at that, right? A strong wick. This is what I mean by Bitcoin could do this. Could be inside a weekly area and still push up. So you see, when I see a wick like this, buyers push up. All right, granted it's still June, right? So we'll see where this candlestick closes. Could close as a green candle, who knows? Right, but the nice part about them is they took out a demand. They took out a demand. Right, and somebody might try and convince me that this is a demand. If it is, I don't like it. Right, but now we're all the way down to what is left of this area here, and I wonder if this is not very close to a major turning point. So I wonder if we're not all the way back down to the floor. We are. Pound CAD has been forced back into the corner, ladies and gentlemen. Right. So if this doesn't hold, because it does not exist anymore, I'm going to make space like that. Because when I'm going through charts as quickly as possible, I want my eyes to see what it is and not what I thought it was. Right. So there's no demand there. And the only thing that's kind of like holding price is the major turning point demand, which is that big, which had a lot of consolidation before price exploded up, right? And then ever since then, markets have come back for a return here. All right, I'll repeat that again. The main demand is the major turning point where price accumulated or consolidated before expanding, shooting up. Then markets did whatever here, and then now markets have arrived here. All right. Now, in a normal world, in a normal universe, which we don't live in, but in a normal universe, one could almost try to ignore the messiness of that accumulation and assume that this is a good place for pound CAD to go. Right, all the way back up there, and then to start another, 6 months process of going up and coming back down. I don't think we're going to get that. I think we're going to get a high wick like this, then we're going to get a feeling of that wick, and that is a strong red candlestick is going to happen, which means this might even close as a green candlestick by the end of June, giving it that 365 PCP, feeling. You know what I mean? Then you get a bearish engulfing pattern in the month of July. And so that's probably why we want to sell, right? We've got, arguably good distance between price and a demand right now, right? Where price is today and where the demand starts, that's about almost 400 pips, right? 365 pips, right? So that's good money, make good money. Right, on the weekly time frame, all those green candles I'm telling you about, this is what they look like. So on the weekly time frame, we've got a bearish engulfing pattern just outside there. That's just been nicked by the close of price this past Friday. And the question is, will markets fall? So let me just remove the previous rectangle, right? Because I don't trust this area where price is, but I don't know if I want to wait for price to come up here. I think we should have pending orders up there in this weekly supply too, right? Because there's going to be a lot of good confluence. That's also a very good high place, right? Before we even move forward, let's consult with our favorite Auntie Fibonacci. Hey, Auntie, what's the problem? Where's the PCPs? What's going on? Let's talk to her. We're going to draw a bearish Fibonacci from the top of this candlestick all the way down. Auntie Fib is awesome. She does not lie. Okay, PCP level 38, 0.32, and you can see it. You can see market PCP means potential continuation pattern. If you don't know that, you haven't subscribed. You don't have the notification button on, so you don't see all my videos. Hit the subscription button now. All right, and then we've got these important levels here, right? So there we go. This is so messed up. There we go. So somewhere in here we've got a supply. You can see there, right, inside the golden fib. But just outside that golden fib, you've got that popular 51%, also another weak supply. So I mean, I don't trust this, right? It could work, but it would be so much nicer if markets got even just up there. That would be more comforting for me. All right, even if price just got up there, that would be absolutely more comforting for me. And I think that's kind of like how you should want to kind of have a look at it. Apologize for the second, screen drop there. All right, so what am I going to do now that I know what the weekly looks like and I've looked at anti-Fibonacci? I want to quickly have a look at the daily time frame. All right, so this is what the daily time frame looks like. Right, so you can see here at your PCP area, and let me just remove the PCPs because obviously it's going to be too many lines, too much noise on the chart, blah, 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 blah. Right, so you can, right, so you got a PCP there on the daily, not a good place to sell. You've got this very strong bull explosion from that governing demand, right, which makes a lot of sense. If I was to tighten my area of value, right, why? I want to make it small. If I'm going to make a choice to sell something and I'm wrong, I want to be as close as I can to my stop loss, right? Well, would this area work? Maybe, maybe not. We shall see. But those of you who want to take a bit and you're not yet in, maybe you're already in because you got triggered early. I don't know. But I'm going to mark this as a cowboy area because once again, I'm still absolutely not convinced, even though it definitely is a good potential. We saw according to the Fibonacci, it's a PCP zone, right? So price is more than likely and welcome to continue. Price is more than likely and welcome to continue. Right? So the PCP area, so I'm going to make this red, right? So this comes with high risks, right? But you might get some good rewards, right? And also it could be just a tester, right? So what I mean by that is market sell to come buy in and you get a bigger bull run. Right, so if you're buying, if you're selling at the red area of value, just so you know, I wouldn't take it. It's not yet a 1:3. It's not a perfect 1:3. It's almost a 1:3, but you can take it. If you're 1:2, if you need to be trading, you need to be busy all day on your phone, then yeah, it's possible. It's possible. It's a very, very good possible trade to take. All right, that's option one. Option two then is to wait for that 50% Fibonacci area that we spoke about. And somewhere in here, WS2 simply means weekly supply number 2, which is the first weekly supply we're supposed to meet, right? So as these supplies were changing, right? Because remember, there's a weekly supply here already. It's a very beautiful imbalance. Ooh, yeah, I might actually, right? So look at this. Some teaching. It's not a good risk to reward. It's not 1:3. But now I'm tempted. I like the breakout structure. I like the imbalance. So for me to take the trade, what am I going to do? I'm going to go to the H4 time frame, H2 time frame, and try to get the best deal possible. All right. And what that normally means is I'm going to have to break down the areas of value inside the cluster. So just because I really feel like, oh, but this looks very nice to trade. And what that means is I'm going to look carefully to see what's going on in here. Right. So then I like that area there. That area, and I put my stop loss just above there, right? So I've got a very high wick, like looking to create some type of a pick after a nice strong rally. I've got somewhat of a short base. I've got a bearish engulfing pattern, and I see price does not return there for the first time. So now my area of value is reduced to that area over there. All right, and I might get triggered, I might not, but reducing my area of value increases my risk to reward if I'm right. So now all of a sudden, if I just wait for price to get up there and I take a sell and I'm right, I make about 1:5 risk to reward. But if I'm wrong, I'm even losing far less now because the area of value is smaller, right? Making that cowboy area, absolutely worth it. Okay, Now, next area of value on the daily time frame is this one. And I was about to go at Kinihashi. You can see there's confluence with the weekly supply. Keep it clean, keep it simple, keep it fresh. You know, if price leads you by the weekly supply, then you know you're not that lucky. But this is what it looks like on the daily. I agree. I completely agree. Only that the area of competition is very big, right? So you know, this is something I would wait for. Okay, and I guess the bigger yellow rectangle is probably some monthly area, right? And so yeah, this is what I would wait for. Wait, what? Am I correct, guys? Weren't we correct in this area right now? Because we're looking at, you know, weekly supply 2. Yeah, look at me, I'm correcting the wrong thing. Right, so weekly supply 2 is this one, and this area is also quite fresh. All right, you've got complicated 365 candles, right, that set it up for a sell high opportunity, and then boom, markets explode to the downside, right? So apologies, I looked at the wrong one the first time, right? So I would also have some very good pending orders here on pound CAD in the event my cowboy area fails, right? This is very good. This is a very, very good place to wait. Something like that, and then we see how that goes, right? So a couple of options here. If you notice, CAD was a bit weak this week because oil fell. Those of you who are keeping track of CADJPY, I remember someone asked me a question around that. Yeah, so that's what's going on here. And then if these areas fail, then we can now start to consult these higher supplies. But intraday, this would be very interesting. All right, intraday, if this works, remember you're a smart money concept person, right? And that's where supply and demand differ. Supply and demand for me means do what the government is doing. With smart money concept, it means make money left, right, center. Right. So with supply and demand, as soon as that risky supply here is dealt with at the top, I hope I'm making sense. I'll show you now. Right. As soon as we get triggered and it actually works, right? A smart money trader, a smart money concept trader will buy here now. And they'll be buying to hold all the way there. Whereas me as a swing trader would not be in those buys. All right, that's just purely supply and demand. So there's a lot of cheese in this chart. There's a lot of money to be made if you are wide awake across all charts. I just don't want to teach that in war rooms until people actually sit through the information in module 3, because then I'll just confuse you. But this is just one of those easy smart money concept charts where you can kind of like eat on both ends, you know, with good timing. Right, pound NZD on the governing time frame, all right? And this is just from, it's not part of the stuff I reported this week because I haven't closed the trade. And I'm really hoping it runs a little bit deeper, right? So I don't want to destroy some of my notes because then when I'm now compiling that report for you guys, it's just, my notes make life so much easier for me, right? But we had multiple trials and runs here on multiple supplies until we got to one that met as a governing supply, made contact, right, and price almost came back. And now it seems like, you know, I don't want to bite my tongue here, but it seems like we are in the verge of creating a bearish engulfing pattern. Obviously, trade 1, trade 2, swing trades were closed a long time ago. It's the one, remember I always say, always just leave one open, just run. Right, break even, let it run, and this is what we have here. Now, in the event you're not with me anymore on this asset and you're trying to climb your way in, what I like about it is it seems to be, you know, constantly trying to create sell pressure. You see that there, first bearish engulfing pattern, and you see that here, second one. The second one is tricky because the candlestick hasn't closed, and I have to tell you guys, you never read the last candlestick until it's closed. So this is a monthly candlestick. It's going to close at the end of the month of June. Until then, I don't know what we have, right? It could be a retest of a bearish engulfing pattern, which could ensue more downside. So that's what I like it for. And actually, to be honest with you, I should probably start locking profits on the third buy. So trail stop it so that in the event I get disappointed, I don't get too disappointed. I'll do that on Monday, right? So this is what we have here, all right? And a good target, even for this guy, it's a lot of money. good target for something like this currently running if you're in it. I know in the senior traders room, about 38% of traders are in it. The last survey I did on Thursday, 38%, you know, so if you're still in it, right, there's still about another 150 pips drop. This will be a reasonable swing low to exit from, right? Reasonable. And that's on the daily time frame. And if you look here on the governing time frame, we have a problem. We have a problem. And that's why I'm saying, that's why I had to get out ASAP, because on the governing time frame, right, markets are not really budging. They're not buying the sell idea, right? Let me just remove this as well. Remove the arrows, remove everything, right? On the governing time frame, you can see markets, generally speaking, the pressure to sell comes from above, sure. Markets spent a lot of time. This is a dangerous consolidation range, right? Retesting this, these multiple governing supplies here, a really deep test there, and then an equal red candle, not even a bearish engulfing pattern. Now we've got a PCP. The PCP, again, to me, smells like it's a downside PCP, all right? If that makes sense. It doesn't feel like an upside PCP, but a structure like this, you either don't trade it, right? There's nothing wrong with just walking away from charts that don't make sense to you. There's so much money there. But what has me a little bit worried, right, is the fact that markets, right, market structure, right, we need lower lows. Until lower lows are formed, we can't really say it's going down, even though it's struggling to go up, right? So if markets were to close like that down there, right, then that would create, you know, a lower high, etc., etc. So that's why I'm saying only one trade running for me, and it's already on break even. I should lock profits because anything goes. This is still quite an ugly chart to trade for the rest of the year. I'm assuming until we break out of this range. And let me show you the range. The range is between these levels here, right, to these levels there. The market is just bouncing in between this range, right? So there's a range in market. I like to avoid range in markets because they are prone to a lot of manipulation. Right, CADJPY, ladies and gentlemen, it's starting to feel like the end of my time, and I did not accomplish all the assets that I wanted, which might mean we need to have another war group. Right, CADJPY did something very cool. Broke a supply, yes, cool, awesome, because of oil, right? Supply broken, I wrote that down there. There's a higher supply, markets have reached. And then on the weekly time frame, sorry about the notes. Somebody asked me about this chart on WhatsApp and blah, blah, blah. So I ended up having to do a little bit of teaching when I was free, right? But it's advisable you join the public Telegram group because that person waited for years, right? So please join the public Telegram group. I see things quicker there. All right, so there it is. There's the broken supply. I've mapped it up for you already. Okay. Unfortunately, I'm not selling CADJPY. I wish I was, but I'm not. I suspected that this would happen, breaking of the supply. I want to buy. So I mapped out a couple of demands. On the daily time frame, you'll note that, you know, if you draw a anti-Fibonacci, bullish Fibonacci from bottom to top where the supply was broken, right? So you see here, I've already said on the chart somewhere there, you can do it like that, right? 50% Fib, golden ratio, but I say H4, and I'm acknowledging to myself that there's no confluence here. So don't be in a rush to buy. Right, so I didn't. So the only buy I have that I want to take, the only buy I've mapped out, not in it yet, but that I want to take on CADJPY is down here. So I'm going to let the drop happen. I'm going to let this Fibonacci H4 levels without confluence of the daily happen, right? I mean on Monday, Tuesday, right? Maybe if you were betting boy or girl, right? You could start selling there, but I'm not into that kind of stuff. I'm just going to wait for price to make contact there. I already put a pen in order. That's CADJPY daily buy. I'm going to wait for it. Why? Because I still think there's still a lot of room to go to the upside. Otherwise, why on earth are they removing supplies? When a daily supply is removed, don't be quick to take the closest, easiest buy, especially on lower time frames, right? Wait for the daily buys or the daily supplies. I've preached this message many times. Pound JPY, my redemption. Had to close the trade 2 weeks ago. I communicated that to everybody, and I did not get into this. I did not get into that. And now, only looking at it now makes sense. Why, right? Bringing in some sellers, create a short base, explode, rally, right? Drop base rally. Oh, man, didn't get into it, right? There's nothing I can do now. If markets break the highs here, then we can come back one day and talk about it. But all these buy one, buy two, everything now is closed. I'm not in any running trades on pound JPY. I think I reported this in a war room or Telegram group or something. Someone asked me about pound JPY, right? But that's the trade. Russell, the rut is RTY. Right, yeah, there we go. Right, so I'm coming here to just double check everything that we said about indices at the beginning of the war. That's very important, right? And that was, first of all, that there's a gap. You can see USD at a gap, Russell has a gap. Russell also has a bearish engulfing pattern, like every other, indice that we looked at, and that could be, telling, touch that, drop, or go up. And then I told you guys, you're gonna have to kind of like spread yourself a little bit thin this week, because any one of these trades could be the one, right? But if you go to H4, I didn't even bother with the weekly time frame. I can go back to if you want, but it's kind of like obvious, right? For bearish recession, blah blah blah. Right, if you go to H4, I want to see how the Russell reacted to power on the 15th of June. So same setup, right? No order block, original turn, right? And this is nice. Man, I don't know what is going to happen in the markets to get markets to even rally like this. This is going to be headline worthy. Markets back up. And when you start to see those headlines, come back and check these levels. When you start to see those headlines, come back and check these levels. The US 30, Dow Jones has climbed up 500 points. Just get ready for the drop. We're not buyers right now. We let them rally, push price up because we know where it's going to go. Down. Leroy, if we're going to sell high and they're going to push price up, why can't we go up with them? Because you don't know where the original turns will be, or how many they will be, or that your psychology can handle this. Can your psychology handle this? Can you, I'm asking you, the person who likes to know, why can't I buy up and sell at the same time? Can your psychology handle this? Let's say you're on US 30, you've got a $500 account, you go 0.2 lot size. All of a sudden, you picked a beautiful bottom. It's going up, Your $500 is now $800. And then there's an H4 time frame, not a daily, literally at about 4 p.m. for no unknown reason. About 50% of your profits are taken. So now, from having 500 just your capital to making 300, you're now down to about 650. Would your psychology be able to handle that hold? Or would you not start to say, close, just close now before you run a loss? And then when you close now, they come back. Look at this red candle carefully. It comes back, it zeroes you out. So now you're $500 capital, but you're now negative. Literally, you're in the red by $50 because this trade came back all the way, zeroed you out. Would you not close at a loss? Would you not just say, screw it, I'm going to save my capital, close at a loss? All of a sudden, you're now 450, you go take a shower, you think you've survived the bullet, you come out of the shower on the same day, and now markets have gone way up from where you entered. You could be back at $700. Can your psychology handle that? If the answer is no, which it is, I'm telling you it is, then only trade alongside the majority flow of money until you've done my module 3 and module 4, where you understand smart money concepts and why that retest was necessary. Because remember, as a 365 trader, truth be told, you should not be guessing bottoms. Truth be told, you should not have been in the buy here. You should not have been. What you should have done as a 365 trader, according to module 1, you should have only had an area of value after an imbalance. This was markets coming to trigger you for the first time. The problem is a lot of traders will look left, found a demand, and if that will psychologically mess them up. Right, so please remember, when markets during the week start to, hype something, just watch out for these two levels, right? This is very nice on the Russell. Very nice on the Russell. And the original trend that I don't like on Nasdaq, that is no confluence on H4, but on the Russell, it's very nice, which means if it works on the Russell, it's going to work across the board. It's going to work across the board, even on Nasdaq without a confluence. I'm saying this now. Please don't forget. Okay, Russell. I did tell them, look at the Japanese index, J225. Why? Because once in a while we need to look at some nice things, right? And J225, ladies and gentlemen, moves the same as Nasdaq 100, right? It's a weird, beautiful mirroring, right? So this was a clean sell, nicely done. I gave it to you. No, Leroy, you didn't. Yes, I did. Leroy, you didn't. So, guys, so if you notice this past week, Warren 71, I had 3 wins, 3 losses, 3 pending, like trades that are running, 3 running trades, and 3 trades that are pending, not yet triggered. But out of my 3 wins, I think 1 was an index, China 50 buy, and my Bitcoin sell carried me throughout the week, made more money than my currencies. And the trades that I lost, I was losing about $100 or $64, $74 per se. It's these golden trades, especially things that are worth a lot, that you get paid per point with a good lot size, risk management wise, that I was just shy. I mean, bearish engulf and pattern. With the indices, I am more area of value sensitive, right? So when markets came back to the same place, the truth of the matter was, this was logic, right? Bearish engulfing allows me to have 2 touches on an area of value, touch 1, touch 2, but I didn't sell here. Whoops, dramatic, right? I missed out on a very, very good sale. But nonetheless, this was very good money. And I gave you that index sale in War Room 65 on the 4th of May, where I looked at indices only. Go through the chapter number 6 on that video was the setup, right? And so why am I bringing you here? Because like I said, there's a mirror effect on Nasdaq 100 and the Japanese 225, right? And this is it, right? I'm looking at how strong my demand is. I'm looking at a lot of sell pressure areas. And remember, unlike all the other indices, if this doesn't hold, markets need to really ride the upside. And I still don't see the logic behind that. I don't see what type of good news that would come from. So please really look at those sensitive markets, Russell 2000. Now look at my Nikkei 225. It's like, yeah, listen, man, you can't ignore me. There's a gap here, I agree, but this is interesting. This is very interesting. Look at how PCP level, very small, very short accumulation to make sure Leroy doesn't say arrow effect, right? There's distribution as it goes. This is a good place to sell. And if it doesn't work, even though I think it's a good place to sell, then we go wait up here, right? This is like so be careful, right? So my point is, indices are going to be turning a little bit quicker this week. And just check your sentiment. But that's what I'll be doing. I told them. Right, silver. Enough about gold. We've done gold back to back a couple of times in the water. I'm in a triggered gold trade, by the way, but it's one of those trades that are not. It hasn't really made a lot of money. All right, let's see what's going on in silver. Silver will obviously struggle as long as gold is struggling. All right, silver will obviously struggle as long as gold is struggling. So the last time we looked at silver, we spoke about some pressure to the downside, and it seems like it's been a long time since we last spoke about silver, but it also seems like exactly what we spoke about silver seemingly is happening, right? Only markets are not, I guess, tiptoeing around it. Let's just remove all these lines right now, right? So we had a bearish engulfing pattern, right? And then a continued drop. Oof, the drop could hurt. Yeah, it's a big drop. Silver is still dropping. Right, on the weekly time frame, I'm switching it up a bit. There we go. Those are listed areas of value. I don't know if we'll ever get triggered up there though. Daily time frame, looking good. We missed this one. We missed this one. Sorry, yeah, and you can see the area of value is very wide. We missed this one. This to me does not make any sense. I would much more rather try a non-tested area of value, even though it's already risky now. Now that there's been a drop, right? Drops come from somewhere. Someone had to use sell orders to drop price down, and that's what I think happened there. All right, so please be very mindful of that. And if that doesn't work, then we go all the way up here. Up here will be the confluent stuff, but that means gold would have to be so strong that time, right? So this is just risk very little here, but try and take a trade, and then we'll see real money up there if this breaks. All right, silver done and dusted. Ladies and gentlemen, the last asset is euro pound. I always get so low energy towards the end because it's my throat, my energy. But I hope you guys have enjoyed this. I really hope you've enjoyed this. Right, if Satan had an asset that he uses to toy with my mind, it's literally euro pound. All right, we had a good short-term sell. Try to really guys, all I want is this deep fall. And every time I get so obsessed with the deep fall, I mean, I'm looking at my intraday chart. Let's look at the swing chart. But you know, the results are still the same, really. Oh, yeah, it is my swing chart here. Sorry. Right, it's ridiculous, right? All I want is for euro pound to fall all the way down there, right, without messing up. Now, the problem with euro pound right now is UK is full of drama. The pound is very weak. You saw how low it was in its demand, right? There are rumors that Denmark and blah, 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 and all these countries are benchmarked into a third world country. It's just some absolute crazy stuff, right? Which has now obviously made it extremely, you know, weak against the euro, or euro literally popping a designated supply. All right, when I saw that, I thought that was wild, because even if the supply did not break, folks, right, it was very, very well burned out, right? And I think it did break, but let's assess together. Yeah, it's broken, right? Simple, right? They opened the roof, right? So you know, personally, my bias to sell euro pound to the bottom has blinded me. Once in a while, I'll get an asset like that, and frankly, you know, I didn't believe in it because this was not a good bullish engulfing pattern, right? This red candle close is clearly below this, so I didn't think there was going to be enough buy side pressure. But they're making it as it comes, right? They're making it as it comes, and these things do happen. So after my last stop loss on this, I'm done. I'm taking a sabbatical, a break on euro pound, see how high it goes. And this is not the first time they've done this nonsense, right, on this asset, right? This is not the first time. If you look here to the left, I'll prove it to you. I have a notorious history with this thing, right? Broke the demand here, still went up. Broke the supply, sold, but refused to go below, right? So the psychological mark here that they are currently protecting and manipulating, ranging. And so this is yet another annoying range market, the range between this area and this area. As you can see, that's what price has really been doing for the last, good knows, 2 to 3 years, 4 or 5 years, right? So technically speaking, this might be the last time in a long time I look at euro pound. And I like selling it and buying it intraday, but it is the last time I'll be thinking of taking a sell for now, right? Otherwise, I'll just mess up my win rate and ding a couple of things. Ladies and gentlemen, thank you so much for your time every day in every way. I hope you're becoming a better trader. Please like the video. Please share the video with a good caption. Tell them we are real. Please check out the links in the description, right? This is all for you. The time period to master your wealth is this year. You're between now and December. And if you think you're going to need a month, you're lying to yourself. My rules are a little bit in depth. There are a lot of rules. Module 1, Module 2 is already a lot. Module 3 is going to be a mouthful by itself. So keep mastering this thing, okay? Please keep mastering this thing. I'm excited to have you on board. Don't forget to subscribe if you haven't, all right? Apart from that, shake my hand. Thank you so much for being a sport. War Room 72, done and dusted. I'll see you during the week. 3, 6, 5. Peace. Cheers, guys. Good night.